Easter is coming up in just a few weeks, but the S&P already posted a golden cross to celebrate. Joining me is Jonathan Corpina to talk about technicals and the rest of April. Hi, Jonathan.
How you doing?
I'm good, thank you. I'm kind of craving a chocolate cross now.
Yeah, I'm looking at the boards up here, seeing the the correlation between the cross and what our market's trying to do, and it's clearly something that we've been watching and paying attention to. As yields start to move inversely with each other, I think it gives investors an opportunity to just kind of pull away from this market, not particularly freak out and sell out of this overall market, but gives us an opportunity to just kind of really pay attention to what's going on and what might happen down the road.
April has been historically a pretty good month. Can history repeat itself for 2019?
When we talk about historical trading patterns, right? You've got the Santa Claus rally and sell in May, go away. Historically, that worked, but I think we're in such a unique environment now that I don't think we can really draw lines between what's happened in the past and what's going to happen now. I think investors continue to watch the headlines and see what's out there. We're wondering, tax returns are coming back and how people are going to spend those are the ones who are surprised. That's always been a factor as we get into the second quarter. But I think overall investors are still a little uneasy about what's going to happen in China, what's going to happen with interest rates, and always waiting to see what the next tweet out of Washington will be.
Okay, so China, interest rates, we have non-farm payrolls also this Friday. Any expectations with that?
Listen, expectations I think sometimes go out the window, right? I mean, what did we expect last month and how surprised we were? I think the majority of traders and investors are hoping for some sort of revision and not an explanation behind it, but we might be able to draw some conclusions. But I think that's really what we're going to be looking at as far as those numbers coming out Friday is how do they fix or how do they change what they said last month?
Well, Jonathan, you pointed out the different moving parts that could unhinge the historical records that April has made. But historically speaking, materials, energy, industrials, financials have done really well in April. Any thoughts on those sectors?
Listen, historically they've done well. I think one that has not been doing well is the financials, and I think you really have to look there. There's been some really good buying opportunities in that sector that's been smacked around a little bit, maybe unfairly. But as we continue to talk about interest rates and the Fed and what the government's going to do as far as balance sheets are concerned, I think that clearly has an effect on that sector there. But I think it hasn't gotten the love that it's really needed.
Maybe earnings season coming up will give it some of that love.
Absolutely, that's the next real besides this Friday, that's the next real big thing that we have already set on our calendar. And historically, yes, earnings season has acted as a buoy to our markets, and clearly with the financials coming out early, I think investors are going to look at clearly the effects of interest rates, the effects of tax reform, and the effects of China.
We will watch that. One more question, Jonathan. April showers. Well, we also have some showers of IPOs expected, especially in the tech space. What are your thoughts on the price action happening with Lyft right now and traders getting so into a stock early in advance?
Right. So Lyft, I think, there was just a little bit too much euphoria for that. The IPO calendar was very quiet going into that Lyft IPO, and I think investors were just happy that anything was going on and anything was happening. So they got into that stock, fully aware of the fact that it is, a company that has not turned any profitability yet and has a big competitor right behind it looking to IPO in sometime in 2019. So let's not get wrapped up too much in the euphoria of the IPO and what that means. Look for value, and if something doesn't smell right, don't stick with it.